to close our Impact Summit today, we will have Rich Lesser, the Chief Executive Officer of Boston Consulting Group, join our own host, Manisha Tank, for a fireside chat. This session will discuss the green finance priorities for the financial services sector in 2021. It'll also have a focus on accountability and impact monitoring. To pose questions to them, if you're interested in doing that, just click on the yellow button that's beneath the session window. Without further ado, let's welcome back Manisha for her conversation with Rich.
Glenn, thank you so much for that. And you said that this is closing your belt, hopefully in the Impact Summit. I hope that we have saved the best till last. It's my absolute pleasure to speak to Rich Lesser, who is basically the big boss at BCG, Boston Consulting Group. And green finance has been one of his big priorities as we talk about the priorities in this area for 2021. It's my absolute delight to speak to him. Rich, good evening, I believe. How are you?
Good morning to you. I'm very well, and it's really a pleasure to be with you, except I really wish I was in Singapore right now. But still, this is very, very nice to be at least able to connect in the way we're all connecting these days.
Well, you know, the grass is always greener. I'm craving some cooler climes, and you are craving coming to nice and hot and humid Singapore. I am guessing that you are working from home. Would I be guessing correctly?
You are. I've gone into the office a few days here and there, but mostly working from home for basically 9 months now. Incredible. I would have never guessed the way this year would evolve.
Yeah, you and me both, and everyone else who's watching right now, Rich. And I think it's indicative, isn't it, that this year, 2020, has been one of changes, of pivots, of innovation, of responding to a crisis. We talk a lot, don't we, about the idea that dealing with the pandemic may have put our green priorities on hold. Would you agree with that idea?
Yes and no. I mean, certainly in the short term, in terms of attention, I think that it has, people are dealing with life and death situations and keeping economies going and the kinds of challenges they've never encountered before. And of course, they take time. And I had really gone into this year. In fact, I spent my first business day of this year with our COP26 team that's been working in London, just because I thought this was going to be a year that was all about climate. But on the other hand, if there's a glass half full side, I think the degree to which now a broad stretch of the global population realizes that the world around us can dramatically impact our lives in ways we could never expect, and it can happen quite suddenly and be incredibly damaging. I think that awareness might have a long-term benefit, but clearly in the short term, it's been a massive challenge. It's taken away focus from other areas. I think to some degree, climate's part of it. Now we need to build back better, as some would say.
Yeah, absolutely. I am a huge believer in that, and I hope that we certainly will. Now, look, I want to get to know you a little bit better, and so does our audience, Rich. I know that you have been quite outspoken about green finance priorities, and you are someone who, you give advice to the top CEOs in the world, you give advice to world leaders of all kinds, shapes and sizes, and you have views and opinions about some of the major issues that are affecting our world today. We have asked your team to help us curate a series of photographs, and here's you speaking at Action Against Hunger. I think this was last year. This has been one of the issues that's been close to your heart, and actually there's an interconnectedness between all of these events at which you present. Also, I know that you spoke at Davos. That was earlier in the year, and here we have you being involved in one of the conversations that was quite pertinent to more inclusivity for women. And again, last year, I know that you spoke at the President's Summit, I think I'm right, and there's you doing your thing on stage. I just wanted to see these photographs because I think it gives us a window into your world. You talk to a lot of people all the time. What's the sense you've been getting over the last year of priorities amongst these people that you talk to when it comes to climate change?
So I found it encouraging and daunting, if I'm honest. Encouraging in that the depth of dialogue that's being held on the real issues, what's really going to make it hard, not just about, happy talk about how important it is, but what's going to make it tough. I think that's gone up enormously, and the level of commitment that we see from business leaders in many parts of the world has increased. and the recognition that it's going to require collaboration across sectors between the business sector, the social sector, and of course the public sector. Those have all increased. The daunting part is when you look at how fast we need to improve. You know, we have a carbon bank account, so to speak, and every year we delay, we draw more on that account, and that gives us less room to operate in the years that come after. And so I think that when you really look at that closely, you realize we have a massive, intimidating challenge ahead of us, but we also have more commitment than we've had before. I believe deeply in innovation. I believe deeply in our ability to get hard things done when we work together. But you know, we really have to drive it quickly, given that the science of the challenges we're facing.
Yeah, that's right. And you know, when you talked, Rich, just then about we have this carbon bank account, you know what struck me? How close that sounds to karmic. You know, this idea that what we're giving, we need to balance it with what we're taking, right? Just wanting to stay a bit more on what drives you in having these conversations. Obviously, being the big boss at BCG means you have to talk about all sorts of things. You've had to give advice, and I know that you've done a lot of interviews in the last year just talking about the pandemic and what responses should be, what CEOs should do. But when it comes to green finance, what's been driving you? What's been inspiring you?
So BCG's purpose is to unlock the potential of those who advance the world. And we talk about that all the time inside the firm and what that means. And I really believe in many organizations, not just ours, when you're the CEO of the organization, in many ways you have to feel like the organization's purpose is your purpose too. And that's really the way I view it. That's my responsibility, is to unlock potential. And some of that happens just by leading such an amazing team of people. And for me, that's a true privilege. Some of it comes in the clients we work with, but some of it comes with where you put your own time and energy to try to make a difference. And particularly in a year when the world is under such strain, and when I didn't have to spend a good chunk of my year sitting on airplanes and dealing with the logistics of traveling 70% of the time, which is the way my years normally go, that extra time, that freed up time, ended up going to places where it just seemed like we, and in some ways I try to contribute personally, could make a big difference. And that's been disproportionately COVID-19, because it's so urgent and we have such deep understanding of what's going on and the interplay across issues on climate, which was where I thought my attention would be on in this part of the world, and on racial equity and justice, which in the U.S. is a huge issue where we have to make enormous progress. And you know, in each of those cases, I can't do it alone, BCG can't do it alone, but we can be a catalyst and an enabler and a supporter for many other organizations to try to move things forward, and for society more broadly. That's what we're trying to do. And it gives me enormous energy. I feel like the ability to be in a role like this is the privilege of a lifetime. And you have to look at that with a sense of humility and a sense of responsibility of how you take that energy and try to channel it in a positive direction, including making sure that BCG is a thriving entity so that we can continue to invest and we can continue to move forward. But there's a lot of other ways to channel that energy too.
Yeah, but you also have to keep that energy going as well. How do you feed the kind of, you know, where do you get the fuel from to keep up? I'm sure that, you know, I've seen your leadership series. I know that you post these videos. And what I've noticed is that there's such a huge amount of involvement from the rest of your teams. With that, I remember seeing it, and it was a business school exercise from IMD Business School some time ago, and it was about trying to get your organization to shift to a more sustainable mindset. How have you risen to that challenge?
So a couple of things. First, at a personal level, my energy comes from being with other people. I mean, it always has. I think that's just sort of who you are at some core level. It's been a weird year, right? Because at a physical level, I've been more distant from other people other than my family than I've ever been in my life. But I find technologies like this have far exceeded my expectations. I would have never guessed in a year like this you could feel so connected to people all around the world, and I've really tried to take advantage of it. On an average day, I'm normally in 3 continents, you know, at various different times of the day and night. And to see BCGers at all levels spend more time. I spend now more time with our new incoming cohorts than I could before, because I don't have to be physically in the office with them. I can join for 20 minutes or 30 minutes at different times, and our leadership team, and of course our clients and communities like this one. I think for us generally, that's also been a source of energy and inspiration. I just spent this morning with our social impact practice. They have their annual meeting, virtually, of course. Our social impact related work has grown 60% this year, 60. And that's, I think, a function of a recognition that the world really needed it, a tremendous amount of energy and passion in BCG, and an increasingly broad set of partnerships and roles we can play with both the private sector and with the social sector to move things forward. So I think that's provided a lot of energy to the entire firm, not just to me.
Well, I tell you what, that's great to hear. So now let's get into talking about the climate change crisis a bit more intensely. Over the last 20 hours or so, we've had some dire warnings from the United Nations based on the most recent reports which have been coming out about the climate crisis. And some of the headlines include Earth is sailing into a climate chaos. So obviously, the need for rapid acceleration towards better green financing is very clear. But when we use this term, green financing, have we come to a conclusion on what that really means?
Well, actually, that's one of the challenges we're facing right now, is that we haven't aligned on taxonomy, and it means different things to different people. But if I could just step back and say how we think about it, it's urgent to push on achieving the SDGs and the Paris Agreement. And it requires a fundamental transformation of our global economy. But that also is going to create significant opportunities for innovators and for investors. And if I take them, we need investors, public and private, together, because they have a critical role to play in facilitating a rapidly and orderly transition to a more sustainable and a more inclusive world. For private sector institutions, they're going to play a critical role as the intermediary between supply and demand for capital, as a lender, an arranger, and investor. In the public sector, which means like national governments, multilateral development banks, they're going to play a critical role in providing targeted risk-bearing instruments, such as concessional rates of financing or guarantees that enable the private sector to invest into early-stage technologies and higher-risk markets. And for philanthropists, we need foundations and we need family offices to provide forms of catalytic capital that can unlock private investment. And specifically, they can deploy capital that's willing to take some higher risks, to be invested more patiently in longer-term horizons. And as we think about green financing and what that means, we need all of these financing sectors actively engaged if we're going to make the kind of progress that we need.
So what would you say have been emerging as some of the do's then, in terms of bringing yourself over to a wider sort of green finance portfolio as a corporation?
Sorry, say that again, please.
So it's basically, what is it that companies should be doing? What would you say are the do's in trying to accelerate this adoption of green finance?
Well, I think at the company level, we need we need innovation at multiple levels. If I can just step back, I just want to share the magnitude of the challenge, because I think it illustrates why we need so much change. We just published with the GFMA, the Global Financial Markets Association, a report a week ago on climate finance and what it means for the real economy. And the estimates in that report are that we're going to need for 30 years, $3 to $5 trillion a year of financing to make this work. And right now, a number of banks have made very large commitments, $4 trillion worth of commitments to be able to move forward on this. But when you need 3 to 5 trillion per year, when you divide that 4 trillion over 5 to 10 years, we have 600 billion a year today to finance the critical investments for climate change. And so that's going to be a huge challenge. And then And then the question, and just in terms of where it goes, because I think it's very interesting, particularly given where this conference is, Asia will be the largest growth market for climate finance. 66 trillion is the estimate over 30 years. And it's driven to a large extent by the scale and pace and growth of Asia's economies and population and the increasing urbanization. And the largest sectoral investment need at about 95 trillion, a massive number, is for electrification. So when you say, what do companies need to do? Number one thing they need to do is we need electrification to happen. Electrification of technologies and processes, and then what comes along with that, which is the switch from fossil fuel-based power to renewable power. I don't know if would it be helpful to go into that a bit more? What would
Yeah, I think we do, and I want to add to that point about going to renewable power. Something that Hank Paulson was saying earlier in our coverage, and it was about you got to price carbon. Earlier this month, I spoke to Bill Winters, who said, he's been trying to work on a carbon market for the last 30 years, and it didn't gain traction for a very long time. But suddenly we're beginning to have that conversation. But we need to see volume. So as much as we need to see volume, right, on the renewable side, we need to see volume on developing an alternative market to deal with the carbon problem. There's a lot there, but perhaps you could walk us through it.
So I'd like to build on that point. What do we need to do? That's exactly the right question. And what do leaders need to do right now to ensure the development of a green finance market and to be able to get to this 3 to 5 trillion per year in a feasible way? I'd like to highlight 5 things because it's a big agenda and it's more than that, but let me focus on 5. The first is that we need bold policy leadership by governments. For example, just as you were saying, we need to price externalities across many sectors. The solutions are subscale or they're not cost competitive with conventional technologies unless we're pricing key externalities and particularly carbon. And low carbon technologies are competing on an uneven playing field with legacy and frequently subsidized high carbon activities. And we need policymakers to address the market failure by establishing sufficiently representative pricing, by aligning carbon price levels, by creating the right incentives to support decarbonization, and environmental and industrial policies that align to reaching climate objectives. And we need a stronger policy commitment to enable investors and banks to invest with confidence. So that's point 1. Point 2 is we need to scale catalytic capital from the public sector and philanthropists. Financing by its nature is constrained by risk. And in some sectors, there are considerable technology and policy risks associated with early stage decarbonization technologies and with the uncertain technology pathways. And governments and the social sector can address these constraints through offering more and better forms of catalytic capital. If just as an example, the International Finance Corporation and the Clean Technology Fund helped develop the viability of solar in Thailand. And the SDG 500, an investment platform launched earlier this year in Davos, is set to invest $500 million in businesses' working capital to achieve the global sustainable development goals. And the funds can make debt and equity investments in early stage businesses. So that's the second. The third is broaden and deepen sustainable finance solutions. We need to move beyond green and sustainable bonds. While the market for those bonds and loans has scaled significantly, we need growth in other asset classes like equity structured finance, bank intermediated lending. They're going to be essential. And we also need for capital market activities such as derivatives to further align capital markets. We also need to be focusing on financing outcomes versus financing activities. So new instruments like sustainability-linked loans, in which terms of loans are tied to ESG performance, are going to expand financing options. Fourth, we need to enhance data and disclosures. There's an imperative for decision-useful data, and we can only scale the market for sustainable finance if lenders and investors have access to the data they need to really factor ESG considerations into their investment decisions. There's a lot of standards out there, but the number of companies that are voluntarily reporting against those standards remains subscale, and we need to accelerate the rates of adoption. And we hear that also from the major asset managers like BlackRock and LGIM, who want that to happen, as well as stock exchanges like the Hong Kong Stock Exchange recently called for. And then finally, back to your earlier question, we have to align on taxonomies and standards. If you're going to grow a market, you need to have greater alignment on how to define it. And right now, there's no common definition on terms like sustainable finance and common definition for climate finance, climate-aligned finance. It just adds confusion and complexity. And if climate finance is going to achieve the pace of growth and scale that we urgently need, it's going to occur beyond traditional green labeled instruments. And there's work on this. And in particular, I just call out the EU is really working on getting taxonomies to bring clarity to the market. We just need to, get it going.
Yeah, there seems to be the emphasis, doesn't it? We need to get it going, and I think on so many
Absolutely.
fronts. You mentioned there that also, and the language you used was, we need that government response to be stronger. So here in Asia, of course, the big news this year was China setting its goals for net zero, Japan doing the same. We know that Mark Carney is advising the UK government over there on green finance priorities. We need more governments to sign up to these sorts of goals, right? You talk to so many leaders. You speak to like I said at the beginning, you speak to CEOs, you speak to world leaders. What's the resistance? Where is the resistance?
Oh, I think governments face a major challenge. They're trying to get people to understand the risk decades from now of an externality that's not in prices today. And we watched even in France when President Macron tried to, price carbon differently, the backlash that was created, the political opposition that rose, the opposition, from citizens to that. I think how to bring citizens of different countries along in this journey, how to do it in ways that people understand the risks and the reason to act, even though it doesn't touch their lives, when there's so many more urgent things pressing on them. I really do feel for our political leaders across all countries of all different kinds of systems and trying to do this. And at the same time, I am encouraged at the things that you're describing. I spend a lot of my time talking to colleagues in the EU, and I think the EU is really trying to step up, as is the UK, no longer a part of the EU, but also being bold and trying to move forward. I'm so pleased at the announcement that China has made. Obviously, we're all looking to see how they start to bring it to life in the next 5-year plan that we'll see next month. But it's a bold commitment, and China has a history of acting on the things it says it's going to act on. So we need to see it, but I'm encouraged there. And as you say, Japan has also made commitments. Of course, the one I haven't mentioned, of course, is the United States. I mean, many other countries too, but the United States is the second biggest emitter. So, and obviously, the current government does not believe in it. At least the president doesn't, and his key advisors. But that's changing in 5-6 weeks. And I think when it changes, we have potential to see the United States stepping up. I don't want to minimize the challenge, because the ability to get legislation through Congress, which is really what we need, is going to be really tough. So there may be some opportunities, but probably not nearly as bold as the world needs. But certainly, at least the U.S. Standing with other world leaders to make progress. The President of the United States does have a lot of direct authority that he can exercise. And so my hope is the U.S. will at least be a seat at the table, even if it isn't at the leading edge seat, given the internal political constraints in the country. But we should have a lot of empathy for our political leaders trying to navigate this. It's a big ask. And my hope is that we're seeing progress. There's a long way to go.
Yeah, I mean, absolutely, there's a long way to go. And in particular, right, for emerging economies, because these are some of the economies we're talking about going to suffer the worst of the consequences of climate change and the climate risk. There's also a huge gap when it comes to climate insurance as well, to cover for the kind of disasters that these countries will see. What about where we require change on that front?
Well, first, I just want to highlight the challenge on both ends. on the one hand, it's often more developing countries that are at the greatest risk from what climate change will do. We've done a lot of work on adaptation of African agriculture. We all know Africa's population is increasing massively. The risk to it already, even if there was no climate issues at all, it had to have a massive increase in agricultural productivity to be able to feed its populations. Then you throw in climate change and the risk that that has to increase drought, decrease productivity of land use. I mean, we're going to need technology, we're going to need different models, and of course, we're going to need to moderate the climate change as much as we can. In other parts of the world that are low-lying, there's potential for hundreds of millions of people to be displaced around the world, and that's going to be expensive. So that's the challenge on the one hand. The challenge on the other hand is those countries have a right to want more energy for their citizens. The developed countries of the world can't look at them and say, it's your problem to keep the energy per person that you have today. They have to be able to grow that. To grow that in the most sustainable ways takes capital. It's upfront capital. Maybe have better life cycle costs, but it does require capital to be able to make those investments. And of course, they're not rich countries and they have limited capital available to them. So they not only face the greatest risk, they also have the greatest challenge. And yet that's where a lot of carbon output is going to grow in the years ahead. Europe may not drop fast enough, but I have a lot of optimism of Europe and even the US with what's happened in power to bring down carbon output per person over time. But it's going to be more than offset by legitimate growth in energy consumption in the developing world. We need to help them finance it in sustainable ways. And hopefully some of the people that are part of this conference are going to be part of the solution to find creative, technology, fintech, and other solutions to help finance that urgent requirement in many parts of the world.
Yeah, I'm so glad that you raised that, Rich, because I wanted to ask you about this. This, of course, is the Singapore FinTech Festival, and that is the obvious question. How do we leverage the FinTech ecosystem to help in achieving these goals? We had a fantastic address from President Uhuru Kenyatta of Kenya just yesterday, and this was something that was underlined. It was great, he was saying, to have networks like M-Pesa. That's wonderful if you want a migrant worker to be able to pay for his or her child's education in a different city, but you've got to take it further. You've got to leverage these sorts of networks and be able to scale up when it comes to addressing sustainability and climate finance, for example. And it's got to be big enough that you can do this for multinationals, SMEs. You can make a shift change, right?
Absolutely. So look, I'm sure over the course of your conference, you've heard many examples. Maybe I can just pull out a few that we would see as particularly promising. And of course, part of the wonderful elements of the fintech community is the creativity, and that you've got these amazing people constantly looking for new ways to find opportunities to create value. But let me pick out a few. I think we would highlight fintech's pioneering new sustainability-linked loan frameworks to finance solar panel installations, energy-efficient home improvements, green mortgages, empowering homeowners to speed up their transition to a low-carbon lifestyle. Fintech's providing affordable financing options to sustainable services, such as solar water heaters to underserved populations in countries like Mexico. A creative approach to startup financing. Gravity is an example that combines grant and debt and equity investment. Collecting and analyzing data from companies to enable better integration of climate risks and opportunities into finance decisions. We see fintech companies pioneering new ways of collecting ESG data, including satellite data, Internet of Things, natural language processing. And then we are in Singapore, even if we're only there virtually. I just also want to highlight there's a great milestone in Singapore last week that you may have already discussed, but we were so excited to see the Monetary Authority of Singapore announce 4 new digital banks. And our feeling is, when you create and the owners of those, the people that are the forces behind each of the ones that were selected are just great organizations. And I think we're going to see a lot of innovation. Singapore's always a source of innovation for the world. I think we'll see it coming from there. But I think the potential for those sorts of things happening in many other countries is terrific as well.
Yeah, I mean, that's great to hear. And it's certainly something that's being celebrated over here, that major milestone.
It's terrific.
Someone else that was speaking yesterday, actually, was the president of Estonia, Kersti Kaljulaid. And it was very interesting because when she started her address, the lead-in to her conversation was someone saying how excited they were to perhaps come to the Singapore FinTech Festival next year in person. But her response was to say, no, no, no. I don't want to go in person, or we shouldn't be wanting to go in person. Do we need to embrace a world that is completely changed? Do we need to, you, for example, Rich Lesser of BCG, do you need to travel less? You can still pursue your green finance priorities without having to get on a plane.
So we have to have different ways of doing things. And I think there'll be many more opportunities. We talk about it all the time. In fact, I was just talking about it with my own leadership team this morning. I don't think we'll ever go back to the models we were using just a year ago. It seems like so long ago, but literally a year ago for this, and the intensity of the travel of activity that we had. On the other hand, you do lose something through this in terms of the informal connections. If this event were taking place in person, of course, speeches and conversations like this would be a valuable thing, I hope, for the participants. But it would be just as valuable to be meeting someone over a cup of coffee or informally connecting in different ways or talking about a speech afterwards in an unexpected situation. We lose a lot of the informal nature. So I think we're going to end up with some of both. I think the intensity will go down. I think we'll be doing many things that traditionally said, well, we have to have a meeting. People say, well, do it like this. We don't need to be flying all over the world. But I think for community building, I feel like for our newer employees, not being together physically is a real cost in terms of their integration and culture and all the rest. So the world has run, the business world has run the greatest forced experiment in its history this past year. Take every company in the world and say you have to operate in a totally new way overnight with no prep, do that. I mean, we've all learned so much. It would be a shame if we took all that learning and said, well, the pandemic's over. Now we go back to what we did in 2019. What a loss for the climate, because there's a lot of carbon in that model, a loss for productivity, a loss for people being able to lead more balanced lives. I think a loss for diversity. I think these sorts of models are going to make it easier for women to be in the workforce. Well, for primary caregivers who are disproportionately women, men and women, to be able to have different kinds of lives and careers and get balance in different ways. So I don't want to keep doing this. This is not the model for our future, but I sure don't want to go back to exactly what we had either. And I think our opportunity, and each company, every CEO I talk to, of course, they want to talk about the economy and the pandemic. And if you're in the US right now, you're really concerned about what, the rising virus load and all the rest. But almost all of them, once you start talking what happens next, a lot of it's about how will work get done? How will people connect? How will we leverage digital technology, not just to go all technology, but to build what we've called bionic companies, this intersection of better data and analytics, better technology platforms with upskilling our people, creating more agile ways of working, and building this sort of web of seamlessness between the two. That's what's on CEOs' minds, and doing that with more hybrid work models is now become integral to that discussion, as it should.
Yeah, and another thing that was very pertinent to her conversation was, of course, and you will know very well about this, is Estonia's e-economy, so to speak, and how that can be leveraged in a way to fight the sustainable fight, right? It gets me thinking about SMEs. So obviously you talk to people who run huge multinational corporations, but what do you say to the owner of an SME who says, this sounds really complicated to me. I don't even know where to get started to meet these sorts of goals when it comes to a more sustainable finance model, even in my small scale business?
So first, if there's one group of people we should have a lot of empathy for, and therefore societally be providing a lot of support to, it's our small and medium-sized businesses. I mean, think about what they're dealing with right now. They already had this transition to digital, which for many of them was a big step in a direction that, they had taken some steps, but many of them were starting and didn't have the investment capacity, that the huge companies have. Then you throw onto that climate and all the changes that requires to build lower carbon business models and change the way they operate. Now you put a pandemic on top, which for many of them have put pressure on the revenue line, change their workforce models, again, without sort of the resources. I think there's a societal responsibility. The first societal responsibility is to its citizens, keep people healthy, help them keep their jobs. I mean, that's job one. But not far behind that is what do we do to help the small and medium-sized business community adapting to these three massive challenges, because they are the source of job growth. They're the source of a lot of entrepreneurial spirit. They're often the backbone of broader economies that involve big companies that depend on small companies to get stuff done. And so I think the challenges are real. Look, the first thing is, which I'd say to any business owner, from a tiny business to a huge one, we are in a world where the ability to learn is becoming the number one priority. And I don't just mean learn as a human being, as a person, when the world's changing so much, but I mean organizational learning. And if I could suggest them to one thing, it's to look at the relative amount of resources that they're putting in their business model to learning and experimenting and trying new things, and double it. Whatever that means, it's very different depending on the kind of business. But we're all if we're not constantly challenging ourselves to learn, we are falling behind, because the rate of change in the world, even before this year, was enormous. And of course, this year's accelerated so many things. And then second, I would look to the public sector, governments. I call out Singapore here. I've been so impressed, with what Singapore's done, not just to help its leading businesses succeed, which of course it does very well, but to help its smaller businesses understand what's going on in digital, understand what they need to do to invest, help them. How do you figure that out? How do you make that work? How do you provide training facilities so people can go learn new resources? But, Singapore's always, Singapore doing it is wonderful, but Singapore has a history of being able to sort of look a few years ahead. We need many governments around the world to be looking at its small business community. And I think large companies can help. These are our customers or our suppliers in many cases. And I think and it's so much easier to transfer knowledge when you can put things online, you can create webinars where people can join. I think a lot of us can do things to share our knowledge and our perspective to help smaller organizations around us. They still have to have the will and the passion and the energy to change. If they're stuck in old ways of doing things, they're going to struggle no matter what you offer. But for those that do want to step up, I think it's our responsibility to help make that possible.
Yeah, well, it goes back to the old adage, doesn't it? Where there's a will, there's a way. We've got about 3.5 minutes left, Rich. So 2021 is coming. 2020 is going to be wrapped up very soon. And I think a lot of people will be ready to move on. But we still have a lot of challenges to get through, vaccine rollout programs, all sorts of things. When it comes to green finance, there's obviously this agenda, this push now to remind governments, to remind organizations to not take their eye off the ball. What would be the key messages that you'd want to leave us with as we look at 2021? Where do we want to be by 2022?
Well, first, we need increased commitment levels across both the public and the private sector. I'm hoping we'll see many more companies sign up for net zero, recognize the power of the SBTI framework. There are different ways to sort of validate it. But I think this net zero responsibility, I know we made a big net zero commitment back in September. It was not easy to do. You really have to challenge yourself. I don't want to make that seem like a straightforward thing. It takes a lot of work to really think it through. But what we've been struck by working with some of the largest and most reputable big companies in the world is even what they thought they could do, when they really dug into it, they could go much further in ways that were not detrimental to their profitability. They couldn't go as far as they needed to. For that, they needed government support, a price on carbon, different models of protecting the borders so that the business didn't flow to their to other firms that weren't making carbon commitments. I'm not saying that companies can do it on their own, but I think companies can go further than they think and can change the mindset in their own organizations about what is possible and be sharper about what they need from governments who want those companies to thrive, want the jobs, to what they need. Obviously, the public sector needs to step up too. We talked about that earlier. So that's one bucket. The second thing I just highlight is I hope we can get more and more transparency and in terms of carbon disclosure. There's been a lot of work on many organizations from that. I think, it's hard to make progress on what you don't actually measure and report. And I think we just need to see more consistency and broader transparency on that. And then finally, I hope that we can turn climate from a source of debate and vitriol to a source of inspiration. There's so much great innovation going on out there. And I'd love to see us coming out of COP26 at the end of 2021 with, yes, a sense it's going to be really hard, but there's a lot to be excited about out there, including what a number of the fintech companies in the world are doing that we talked about earlier, but not just the fintech community, very broadly. I hope that can be a source of energy and inspiration, because we have a long journey ahead. It's easier to run a marathon if you're inspired to want to get to the finish line versus someone's forcing you to do it and threatening you if you don't. Inspiration goes a lot further in motivation, and I think we need some of that as we look to the year ahead.
Absolutely. And with the United Nations saying the world's rich in particular need to cut their carbon footprint by a factor of 30 to slow climate change, it's obvious how much work needs to be done. Rich, we are channeling all of our extra fuel towards you to help you fight the good fight. Thank you so much. It's been a huge honor and a pleasure to connect with you today to talk about all of these issues. We wish you well in 2021. A huge thank you from me and the rest of the organizers here at the Singapore FinTech Festival. Everyone, Rich Lesser, the big boss at BCG.
Thank you, Manisha. It was a pleasure to talk to you as well. And have a great rest of conference.